Let's face it, most people have no idea that the market is shifting until it already happened. And the thing is, the market always gives you signs long before it changes. You just have to know how to read them. By now, everyone's heard the terms buyer's market, seller's market, balanced market, but almost nobody understands what that actually means or why it happens. You'll see headlines all the time saying, we've entered the buyer's market. But here's the truth. If you're waiting to hear it from the news, you're already behind because the news are just reporting what already happened. And that's why most people get caught off guard. You see, the market doesn't crash or shift overnight. It shifts quietly, little by little, while everyone's either too busy to notice or just don't know how to follow it. So in this video, I'm going to show you the 3 things that clearly signal that a housing market shift is about to occur. And I'm not just going to be throwing words around or explaining theories all video long. I'm going to back everything up with real data from 3 different markets that are all within an hour away from each other. That way we can truly analyze the patterns and correlation that these 3 signs have along with the housing market. And if you're someone who likes learning why things happen and not just what's happening, then make sure you subscribe to the channel. I make these videos to help you better understand the game so that you don't get played by it. So with that, let's jump in. Sign number 1. Before I tell you what the first sign is, let's jump back for a second. Like I said in the intro, you probably heard people say things like, oh, it's a buyer's market, it's a seller's market. But the thing is, most people don't actually know what these things mean or how they're measured. They just repeat what they see on TV or hear on the news. And if that's the case, then how can you possibly use that information to your advantage? So let's strip down what's actually happening. When you say buyer or seller or balanced market, it is basic supply and demand. When there's more homes for sale than there are buyers actively looking to buy, that's a buyer's market. There's more choice, less competition, listings sit longer, and sellers start lowering their prices just to compete. So buyers have the advantage, hence the name. Now, when you flip that and there's more buyers in the market than there are houses for sale, that's a seller's market. That's where you see bidding wars, fewer conditions, and prices getting pushed higher. And finally, when these 2 sides balance out, so not one side overpowering the other, that's what's known as a balanced market. Now, those labels, they are calculated. And the way that real professionals measure this is through something called the sales to new listing ratio. And when the sales to new listing ratio is heavily trending in one direction, and that's your first sign that the market's shifting. The formula is simple. You take the number of homes sold in a given period, which is usually per month, and you divide that by the number of new listings in that same period. Now that will give you a ratio, a percentage. And that number paints the real picture as to what's happening behind all the headlines. So traditionally, below 40% is labeled a buyer's market, which means less than 40% of listings are selling. So that could mean fewer buyers or more sellers or both, but either way, it's pressure downward on prices. Now, if that ratio is between 40 to 60%, that's labeled a balanced market. Supply and demand are relatively equal, and prices will likely hold steady, if not just increase at a normal pace. And above 60% is labeled a seller's market. That's telling us that most listings are selling quickly. It either means strong demand or limited supply or both, but either way, it's upward pressure on prices. And again, when that ratio starts trending heavily in one direction, that's your first sign that the balance is shifting. Now, the second thing that I always watch for and is always telling us something about the housing market is the days on market. Because the longer it takes for houses to sell, the more it's telling us about what's actually happening behind the scenes. In real estate, we call this the days on market, which is basically just an average of how long a property stays listed until it sells. Now, this number might seem small, but it actually reveals a lot. When the average days on market starts climbing, it's not random. That's a signal. It could mean many things. It could mean buyers are hesitating. It could mean confidence is fading. It could also mean house prices are just simply overinflated. That's where price reductions become more common. That's where listings just sit for longer periods of time. And the energy in the market shifts from excitement to hesitation. But when the days on market drops, then homes are flying off the market. Days on market is basically the market's heartbeat. It tells you how fast or how slow the heart is beating. And once again, once it starts trending heavily in one direction, that is your second sign that the market is shifting. And sign number 3, the third piece of the puzzle, is inflation and interest rates. When inflation rises, central banks will increase their interest rates in order to attempt to cool it down. Now, when inflation does cool down, they then lower their interest rates in order to stimulate the economy once again. Here's why this matters in real estate. When interest rates rise, buyer power decreases and it drops really fast. A buyer who was pre-qualified at, let's say, $700,000 at 2% might only qualify for around $550,000 when rates reach 5.5%. That one change alone can remove thousands of potential buyers from the market. So even if listings or prices haven't moved yet, the moment borrowing costs rise, demand quietly starts to weaken underneath. And the same is true in reverse. So when rates come down, buyer affordability will start to ramp up again. And you can easily track this in real time. You don't need a real estate license. Like, just follow Bank of Canada or central bank updates. Listen for any signals of rate changes. Keep an eye on the CPI, not just the headlines, but the core inflation data. The next CPI report is scheduled to be released on Monday, January 19, 2026, which will cover the consumer price index for December 2025. And the next Bank of Canada interest rate announcement is set for January 28th, which is just 9 days later. And the Bank of Canada largely bases their decision on the CPI report, which was released just 9 days prior. Every quarter point change in interest rates sends a ripple across the entire housing market, shaping affordability, buyer confidence, and ultimately prices. So now that rates have dropped recently, think about what kind of impact that could have on the housing market. All right, so now let's jump in and actually take a look at the numbers here. I've got the sales to new listing ratio. I've got the days on market. I've got the average sale price. I've also got the interest rates and inflation rates. But most importantly, we're going to focus on Ottawa, Cornwall, and Hawkesbury. Like I said, they're all within an hour away from each other. So here we got the number of sales per month. We've also got the number of new listing per month. Now, once again, that number over this number gives you a ratio. And that ratio is your sales to new listing ratio. And so I've got that for Ottawa, Cornwall, and Hawkesbury. I've also got them per year to make it much simpler for us. And down here, we've got the average sale price and the average days on market, and we've got it per year here as well. So when we look at the big picture, Ottawa in the big picture, obviously we're going to notice some trends here, right? So the first thing is, okay, so something happened with the prices in 21 and 22. We saw a big jump in 21 and, it's still, prices peaked here, right? Now, when we jump to Cornwall, we see the same thing, right? So prices took a big jump in 21 and 22, similar to 21, 22. When we jump to Hawkesbury, we see a big jump in 21, 22, but also 23, and we also see 25. So I'm gonna get back to Hawkesbury in a little bit, but let's see if the numbers that I presented in this video would have been able to predict this kind of shift. The sales to new listing ratio has been trending upwards since 2016. Something was bound to happen anyway. The pandemic is its own thing. The pandemic was its own problem, as we can see here. And this was the pandemic in Ottawa. Now, prices seem to have kind of gone back to where they were, here and here. It seems to have gone back to its original normal. Now, Hawkesbury, on the other hand, little bit different. Now, the other thing that we got to look at is in 2020. So Ottawa, 2020, we had the 82% sales to new listing ratio, right? Okay, so 2020 was the year that we had the first massive increase in price. We had a almost 17% increase in the list price, in the closing price. And our average days on market was constantly going down. And then it kept going down. It kept going down into the following year, right? The sales to new listing ratio actually was lower in that year. That's because when this number goes up to a crazy high number, yes, it's going to affect that year, but it's mostly going to affect the following year. It takes time for people to realize, and it takes time for numbers to build up. So let's look at Cornwall, right? So 2020 was that year again. 2020 was also that year where prices saw a massive increase. We see a 16% increase. Days on market constantly going down. And what happened the following year? Everyone suddenly clicked in. Oh, wow, I can sell my house and cash in. Yeah. So people are jet lagged when it comes to numbers. There's this little delay that the population needs before they start seeing things. And Hawkesbury, same thing, right? So 2020 was the year. 2020 was also the year where you saw a massive increase. And what happened the following year? Same thing. Days on market went down. Days on market went down. So when we look at the picture as a whole, right? Prices have been going up. They've always been going up. And then we had the COVID bubble here, which seems to have been killed off a little bit. But when we look at the percentage increase in the most recent year, we see that it's 2.16% for Ottawa. Now, Cornwall, same thing, right? So prices have been increasing and then whoop, we had a little bubble here and we're kind of increasing at a similar pace now, but it has increased 4.65%. And Hawkesbury, on the other hand, 14.56%. Now, the reason that I think that this is happening, it's very simple. It's something that I've been talking about since 2023. It's something I've been talking about since the pandemic hit. Prices are getting so far out of reach that, for first-time buyers, they simply can't afford to live in that city that maybe they were born, or maybe they grew up, or maybe they're going to school, maybe they work. It's getting to a point where people just can't afford to buy in these cities, so they're looking at expanding their search radius. They don't mind it anymore. They don't mind driving anymore. Maybe they're willing to accept living an hour away. A lot more people are much more willing to buy somewhere maybe 30 minutes, 45 minutes outside of a big city just because they can buy a lot more house with the same amount. I've been telling people that this would happen, and it's happening. So what's most important to remember is that the market rarely crashes. It just shifts quietly. You're not going to notice it from one listing or one sale, but you will see it in the patterns at the large scale. So these 3 signs put together, they tell a story, one that most people miss until it already happened. Once you understand the reason as to why these things happen, you're already ahead of like 99% of people out there. If you found value in this video, be sure to hit the like button. It's truly the best way to return the favor. It's completely free and I would really appreciate it. And if you want to stay ahead of the curve, make sure you're subscribed. I'm posting weekly, whether that's finance or real estate related content. And if you're located in Eastern Ontario and you're planning your next move and you'd like to work together, then let's get in touch. Head to the link in the description below. I'm always happy to walk through strategies with you one-on-one, step by step. And with that, thanks for watching. Until next time.